Can you hear me? I cannot hear you, Ola. Can you hear me?
Good. Yes, can you hear me?
I can hear you. It's still looking dark. It's looking
Yeah,
dark. I've put light. My phone is actually bright. I think it's this. Is it this?
it's coming across as a little dark.
Oh, what's going on? You see that I'm using green light, ring light. I don't know why. I think it's my laptop or something. Maybe it's something else. Hold on.
Okay, so Mosu, if you join with your phone, that's a lot brighter. You're muted. You're muted though.
From my iPad, I'll come out from this one. Let's use that.
Yeah, this one is a lot brighter. Hmm.
Hey Ola, let me know when you need me on. Oh wait, I can't hear you. Hold on, why am I not?
I'm mute. I was muted.
Oh,
Can you hear me now?
oh, hold on.
Yay! Now I see you.
Okay. All right,
Thank
give me one.
you.
Nice meeting y'all. Sorry, I was supposed to have my partner took off today, and then I was supposed to have a realtor to man my station. Like
Hmm.
help me while I was here, so I don't know where she went. So if there may be, I'm gonna be on the call, but there may be, do I look crazy? Um,
No, you're good.
okay, good. There may be where I have if she doesn't show up, the lady who's supposed to help me today, I may not hop off, but
What
greet.
time is
And
he supposed to show up?
she's supposed to show up now. She's supposed to be here at 10:30, but it's all good. She may have ran into some.
Okay.
Thank you for putting this on. This is important. I have a couple here now. Well, this is will be their third home, but the market has changed so much.
Oh
It's
yeah, it
big.
has. It has. We are going to start at, I haven't seen anybody join yet, but we're going to
Okay.
start at 11 on the dot.
Oh, okay, you gonna be on time.
Yes. And like I said, this is going to be recorded. So
Okay, so you can
I'll share the recording with you. Mm.
and let me go mute just in case so there's not a lot of background noise, okay?
Okay.
Okay. Hey Ola. I think you on mute.
Yes, I'm
Okay,
back
good.
on now. Yes.
Okay, cool.
All right. I think we can start, and we're hoping you'll have people join us. Yes, I see people coming in. So, hello, everyone, and welcome to Doorvana Talks. This is a webinar series that we put up every month. My name is Ola Ofuya. I'm a realtor serving the greater Houston area, and I'm the founder and host of this webinar series. This is created to just enlighten, empower people who are looking to buy homes, just give them clarity and confidence to take on that journey. As we all know, this is probably going to be one of the biggest purchases, you'd ever make in your life if you're buying a home. And so it's not something you want to go into unprepared or overwhelmed. So what we do on this webinar series is actually talking to people, breaking it down for them, in real language, no fluff, no upselling, just trying to let you understand how you can beat the market, how you can make the best bang out of your buck, pretty much. So Today's session is especially for first-time home buyers. We do talk to investors and people that are looking to upsize, downsize, or whatever, the different spaces, in the industry. But for this one, it's about anyone who's thinking, can I really afford to buy a home right now? Am I even ready, financially, credit wise, even emotionally? Am I ready to take that on? Or you're like, what am I missing? What does everyone else know that I don't know that is kind of holding me back? I see people, still buying homes. It doesn't matter what the economy is saying. How are they making it happen? So let me just put it out there now. This one is not to get you to figure everything out today, but we're going to give you all the information that you need to actually feel better and more prepared to take on that journey. It doesn't take away the part of you having a consultation with your realtor, with your lender, and all the people that you're going to work with in the journey. But this gives you some sense of preparation as you embark on that journey. All right. So this is a safe space. We're encouraging you to ask questions. There are no stupid questions. There are no bad questions. As we go on, please put your questions in the chat as you're interested. And even before we get there, I see people coming in. If you don't mind, get in the chat and tell us your name and where you've joined us from. Would really love to know more about the audience that we have today. Okay. The style of this one typically would have presentation, from the different speakers and hosts, co-hosts of the event. But in this one, we're doing it different. We're doing a Q&A style. So I'll introduce the topic, and then I'll get my fantastic, fabulous co-panel members to talk more about it and give us a bit more information on it. And I'm so excited about this one today because I have great, amazing industry experts on this one with me. I'm excited to introduce them to you. So I will start with Lauren. Lauren Poindexter, she is a new build specialist. She's a native Houstonian, knows the area, like the back of her hand. She's worked as a property manager. She's also, she came by this honestly because her granddad used to be a custom home builder. So she knows the back and forth of it. She's also worked with several builders in the greater Houston area. So she's coming with a wealth of experience, and she's going to be talking to us a lot about how we can, if you're looking to make a new construction purchase, what are the things to look out for? How does it work? Are all builders built equal? How do you determine what builder you want to go with? So I'm not going to speak for you, Lauren. We'll get to it. And also one of our return panel members, Mosu. Mosu is a finance guru. She knows it all, credit repair. She's a finance expert. She does bookkeeping, accounting, and she's also a mortgage loan officer. So anything you need in that space of financing, she'll sit with you, give you the best advice in terms of preparing your credit and also getting the best loan opportunities and options out there for you. So and for me, I am Ola Ofuya. I'm a realtor serving the greater Houston area. Like I said, I'm very passionate about helping buyers find the exact home, that they want and making sure that you're not house poor after buying that home. It's not just a journey that ends on the closing table. It's actually a journey that we take beyond that, making sure that you settle in right and you feel good and comfortable in that home. So without much ado, I will get into it because I know you'll have, your time is precious to you. So we're not going to waste too much time. We'll start talking about our topics for today. And today I've kind of anchored them around the 10 mistakes first-time home buyers make. So we're getting to them one after the other. As I pick them up, we'll talk about how you can avoid them and you can move forward with clarity and confidence. Okay, so you all get your notepads, take notes, write this down. We are not going to be making any of those mistakes. If you've joined this session or if you're seeing it after, you cannot be making any of those mistakes as you get on your own buying journey. But before we dive in, some quick housekeeping. This session will be recorded, and then we'll share clips on social media platforms. So please feel free to, keep your volume muted, your audio muted, and your videos off. Thank you. And also, we will be having Q&A. Like, feel free to put your questions in the chat. I will take those questions as they come on. If we're talking about anything that is of particular interest to you and you have questions around it, please feel free to put it in the chat. We'll be checking the chat and monitoring, and we'll be answering your questions as we go on. All right. And please stay till the end. We'll not take too much of your time. We hope to wrap this up in about 60 to 90 minutes. And we'll be sharing how you can also schedule one-on-one consultations with us, and you can get your home readiness checklist. Okay, now let's get to it. What's the first mistake? It's buyers waiting to be perfectly ready. Many buyers think that they need to have their credit in a certain place. They need to have a certain amount of money. They need to have, done some, they should have some employment history and so many things. I've worked with buyers, and when you hear them talk, you would know, what they come to the realization of after the first consultation is, hey, I could have done this a while back. I didn't have to wait until this point. You know that saying that the best time to have bought your home was 5 years ago. The next best time is now. Time is of a big essence in the real estate industry. I mean, the earlier you can get into it, as much as you don't want to rush, the earlier you can get into it, the better. And a lot of times when buyers come up and talk to us, they find out that they were way more qualified than they thought they were actually, right? And so because of that, I'm going to pull Mosu into this one, and I'll ask you, as someone who's worked with, buyers from the credit report, from the credit part of it and the mortgage part of it, what are the key factors that lenders look at to decide whether they want to approve or not approve your loan? Knowing that, the main thing people think about when they're thinking about buying a home is, getting pre-approved, being able to get that mortgage, being able to afford that mortgage. So what are the things the lenders would look at that would, determine whether you're approved or not and what you're approved for? We can hear you, Mosa. Your audio is not coming through. Probably want to check your settings. So while Mosa is trying to get tech, so sorry, so having some technical interruptions there. I mean, the technology can be quite temperamental sometimes. I don't want to speak for Muslim because I'm not an expert in that field, but I do know that there are a few things that lenders will look at when they're trying to evaluate what you approve for. A big one is your credit score, for sure. And people hear it's put out there, you need to be in the 700s to have a grade, to be approved. But that's not true. That's a myth. You could have as low as a 580 credit score and you still be approved for some kind of loan. There's so many loan programs out there. There is the FHA loan, which is probably one of the one with some of the lowest entry points to it. We have the VA loan, which is even better than the FHA loan. If you've done some kind of military service or a veteran of some sort and you qualify for VA loan, that's going to be your go-to, because with the VA loan, you don't have to pay insurance, which you would have to pay with an FHA loan. Mosu, are you back? Yes, we can hear you now. Okay. Yes.
You can hear me now?
Yes, but we can't see you.
Perfect. Okay. Okay, you cannot see me. Can you see me and hear me now?
We can hear you. You can go ahead and speak, and we can talk about.
I'm not sure what's going on right now, but I'm back. I'm glad that you can hear me now. So, in fact, let's the lenders. What lenders actually look for? Let's start with the number one. They look for income stability. So they want to see that you're consistent and you have a reliable income. So that's just one. So most of them, they look at 2 years of stability in your job and there's income, you're making income. Number two, I'll talk about debt to income ratio. They're looking at your debt to income ratio. This is how much you owe each month compared to how much you earn. So they compare that, and that's the second one. The third one will be your payment history, and that will reflect on your credit score. You'll see that on your credit report. Do you pay on time? Do you pay all your bills and all of your expenses on time. Then the fourth one will be your credit utilization. How much of your available credit are you using? And I talk about this a lot of time to borrowers and even people in general about your credit. Your credit utilization is the most important in your credit history, in your credit report, because and I will give you an instance about that. Which, let's say you have 1,000 in your credit limit, and you spend like $500. Before you run your report or you provide your report, make sure you bring it down to like 30% utilization, which is $300 of your 1,000. Another strategy that I encourage borrowers is that when you know your report date, your credit report date, that will help you to manage your spending. Okay, if you spend the whole 1,000, if your credit report date is on the 20th of every month, and you spend all of your credits by the 5th of that month, make sure you paid everything off before the 20th, because your bank or your credit company will report to the three bureaus on the 20th. So you want to make sure that there's only 1% or 0% that is showing, and that will really increase your credit score by 100, and that is a good one for you. Number 5 will be your savings and reserve. They want to see that money that you want to use for your pay down, and also for your closing costs. They want to see it in your bank. Do you have money set aside after closing? Those are the things that the lenders want to see. Here is something most people don't realize. Two people can have the exact same credit score and receive completely different loan approval. Why? Because one may have lower debt, more stable income, and better savings. So if you have been judging your readiness based on your score, I want you to stop doing that. Your full financial picture matters more.
All right. Thank you so much, Bosun. I'm sure we've picked a few things in that to know, like that's a aha moment for a lot of us. Like, it's not about your credit score sometimes. You and someone with the same credit score could literally qualify for, significantly different interest rates. And we'll also get into how, your interest rate can affect how much you're paying for a home in the long run. So thanks, Bosun, for that. Moving on quickly, let's get to number 2 mistake that a lot of home buyers make. And that is Googling instead of getting a personalized advice. Like, Google is good until it's not, because it does not have your history. It doesn't have the peculiarities of your case to help you make a decision, right? It's going to throw out generic average numbers to you in terms of what you qualify for or what the current interest rate is. We had Mosen talk about how your DTI could affect your interest rate. But if I go to Google and I say, what's the current mortgage, rate? It could tell me 6.75, 6.25. And if you go into buying with that mindset, you may be surprised at the end of the day when your lender runs your numbers and they're telling you this is what you qualify for. It could be higher, it could be lower. You may have to then buy down, the rate. So having a personalized session with a realtor, a lender, they'll ask you key questions that would help to determine what you actually can do. I'll talk about a buyer that I spoke with, and we talked about how this is the range you could afford because you have to make the 20% down payment. We're talking about the closing cost, being 3 to 5% of what the price of the home would be. But, in the course of our conversation, I realized this person works as an educator. And I said, have you heard about the Homes for Heroes program? It was like, what is that? But there's actually programs out there for, first responders, educators. If you're in like law enforcement, you're a firefighter, or you're a veteran, they actually do down payment assistance. So based on whatever you qualify for, you could actually get some money. And it's a grant, you don't pay it back. They actually pay into, because this is some of the ways that the country is trying to take care of our, our heroes, as the name implies. So if you've not spoken to an expert to someone in the industry, someone who can look at your profile and tell you what you qualify for, you can miss out on some opportunities. And I saw that question, we'll come to it. So, but before then, something else I also want to talk about is when you're also Googling, it doesn't tell you about, what makes a builder stand up apart from the other one. What are the peculiarities? What is the local knowledge of that area? And a lot of us know that when we prompt these things in ChatGPT and Google, we don't really do a fantastic job of it because you just put in 2 lines. It doesn't really tell the system anything that, would stand you out from the next person. So I'm going to ask this question to Lauren. I'm bringing you on this one. Are all builders equal? Knowing that you've worked with several builders in the community, are all builders equal, or what sets one apart from the other? And what should people be looking out for when they're looking to buy a new home?
Okay, the best, and I know this is going out there in the world, and I'm going to get slapped for this, but the best analogy that or the best comparison that I could do is housing products are equivalent to like car products. So you may have a Nissan, a Toyota, a BMW, a Mercedes. The housing builders are classified as far as they don't come and say, hey, I'm a luxury product, or hey, I'm an entry market product, or hey, I'm a scale back product, or I'm a lean product. That's not what they're advertising. They're advertising, hey, here's my house. But what goes into the house, what materials are used, the house's features can be different based on the brand. Sometimes you have parent companies that have multiple brands under them. So they have an entry market, they have a luxury line, they have a custom line. So when you are shopping or thinking about a builder, there are builder reports. There is Greater Houston Business Association as well that has ranking reports on the builders. There are national builder reports as well. The same way you would look at a car's ranking online, you can do that with a builder as well. So it's not that they're not created equal, it's that they each have their own different reputations and their own different demographic or products that they push.
Okay. All right. Sounds good. So then it becomes important for you to know when you go into a community what actually matches what you're looking for. And the good thing about Houston now is you hardly find a community that is just one builder in that community. Even when you see, say you see Tamaron by DR Orton or something, this one by that, Pecan Ridge by, at least you would sometimes, a lot of times you would see another builder, you would see, and a lot of the bigger communities, you'd see 5, 6, 7 builders in that community. So if you're so sold on living in that area, in that community, that subdivision, then the question becomes what builder actually matches what you're looking for. Like, Lauren said, there's the reputation of each builder. Some are known to have better warranties than others. Some are known to build in a certain way. So I was working with a buyer and we were touring homes. And one of the things she said was very important to her was to not have the laundry room close to the bedrooms. She wanted by the garage. And I found out that not all builders build like that. Like some of the builders, you'd find the first room and then you find, it's right next to the primary bedroom or something like that. So when you start to get into and that was a major for her. It wasn't a nice to have, that was a must have. So when you start to talk to your realtor, to the expert you're working with, those are some of the things they'll be able to tell you, okay, if you're looking for this kind of amenity or you're looking for this kind of feature in your home, these are the builders that are likely to give you that, And if this is what's important to you, then let's just go look at these builders. Let's not even bother because we know they don't build like that. So that's good to know. Thank you, Lauren. And then before I move on, Moso, a question came in that is for you, and it says, can I qualify, and I'm going to paraphrase this, but can I qualify for a VA loan if my brother is the veteran? So like siblings qualifying for VA loan.
No, you can't, because a VA loan is just for the service members. So
Mhm.
there are certain documents that are required for them to get from their base and where they worked, and saying that the lender are going to review. So unfortunately, no. Spouses can, if your brother can purchase the property using VA loan, and you can also live in it, but you cannot buy it with that. No.
Okay. Thank you. So that's to say, well, you better go sign up for service if you want to use a loan. At least I think spouses
Uh-huh.
too can, right? Yeah. Thank you for that. But other than VA loan, I know VA loans are fantastic. Other than VA loans, there are also other loan programs out there that may not, give you exactly what VA loans will give you, but they're close enough. And again, if you talk to a professional, you would see that, there may be other loan programs that also work for you. Okay.
Yeah, and there are loan payments, down assistance that you can, like Ola mentioned earlier, there are grants that you can look into that will assist you with the down payment and closing costs. So you can look
Mhm.
into that, and that will help you
That
with
right.
what you're
Yeah.
paying up for. Mhm.
Yeah, that's right. That's why it's important to talk to a professional and not Google. Okay, so this question came in and it's for you, Laura, and it says, sometimes it sounds like gimmick when builders set the price and they say 60K off. It's like when they set the price, like how authentic is that? So talk to us
Uh,
about that.
that I saw that coming. I was like, "Oh, I know that's meant for me." Okay, because I'm very transparent. Okay, so when we talked about comparing builders, this kind of goes back into that. One, the market sets the price. Builders can inch the prices along, but at the end of the day, builders, just like the resale market, can't be priced 200,000 more than the competition in the same area, right? So there's a lot of different market conditions that impact builders' pricing. Where the builders, and this is actually a question Ola was going to ask me,
Mm-hmm.
is you can say, okay, well, this builder advertises the base price. The base price, for example, may be 300,000. That typically involves four walls. Like it's just boop, 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 boop. And so everything, when you walk into the model, when you do things like that, that's nowhere near the actual price of the home. By the time you add in, and I'm just using examples. I'm using examples as a very scaled back. By the time you add in backyard grass, or garage door opener, or whatever, then you find yourself 50, 60,000 above base price, right? So when a builder is advertising 60,000 off, what they're really advertising is all of the upgrades that I put into the home. We're going to scale it back and give it to you, and this is going to be the inclusion price of all of those upgrades. Because we'll expound on that more in
Mm-hmm.
later in this but it's not necessarily a gimmick. What it is saying we're not going to charge you for all of the options that we added into this home, if that makes sense. Does that make
Right.
sense? Okay,
Yeah,
okay.
so Rebecca, it makes sense to me, but Rebecca, I hope that answers your question. So it's not like they're trying to scam you or anything, but right, it's almost like you're like telling them, I'm doing all this for you. Like you have to appreciate this is not part of what you pay for. I'm giving you extra. And I've worked with Lauren, with clients, and I'll tell you, she's very transparent, and we've had, situations where the home is spec'd for a certain kind of fireplace and then they didn't actually build it to that spec. It was maybe supposed to be ceiling high, I believe, and then they stopped halfway. And we were like, oh no, that was meant to be part, but that was not an upgrade that was paid for. It was supposed to be part of what the base price in quote would be. But they still gave us credit back for the part of the work that wasn't done, which also was part of the seller credit that went into the closing cost, which reduced what my client was bringing to the closing table at the end of the day. So that's why that emphasizes the part of negotiation in the process. That's why you
Which
need
is
a
why
realtor. exactly right beside you, negotiating, fighting for every little cent you can get out of it. And so
Yes.
because it's kind of, walked into the price of the home already. All right. Thanks, Lauren, for that. So let's move right along. The next one is underestimating. That's the third mistake people make, underestimating your total monthly costs. So a lot of times when we get on Zillow, we get on Hara or any of those websites, you see a home you like, and it will tell you mortgage calculator, and it's giving you your principal and interest is what it's giving you as what your payment. I mean, it's in a fine detail on there that says this doesn't include taxes and insurance, but the number you see is kind of what you run with because that's the number you have. And then, come the first month or when escrow conversation comes up and you're seeing an additional 1,000, and they're like, where is that coming from? So when we're looking at buying a home, it goes beyond what I can afford now to walk away with that house, to get the keys to that home. It's not just my down payment. It's not just me calculating my monthly payment based on the mortgage that I got. That's good. It will take care of two of the four important payments you make every month. So when you get your interest rate from your lender and it says it's 5% or whatever it is, you use that to calculate what's my mortgage going to be and what's my interest going to be. They'll give you the breakdown of it, your monthly payment. But there is the part of the property tax. And in Texas, we pay property tax, right? There's part of the property tax which varies from community to community, not even just from county to county. Like you could actually have two, communities, like they would have different property tax rates. So it varies from community to community. You need to know what exactly the property tax. That's one of the first questions I would ask when we walk into any neighborhood. That's if it's a resale home, I'm going to check on the information or details of the home. If I'm talking to a builder, that's one of the questions I'm asking. What's the property tax for this area? That's part of what you need to build into your calculation. And then insurance. You have to get a homeowner's insurance. If you don't get it, your lender will get it for you. And again, I'm going to share another story. So I have a client. So this one, they're trying to sell the home, but they've had it on, they've had it for a while. And then it was a rental. They got rid of the tenant in there to do some rehab work so they could sell it. And in that time period, the owner stopped paying the insurance, or at least he did not provide information to the mortgage company. And his mortgage payment on a monthly basis went from 1,800 to 3,200. I kid you not. And he was like, what happened? And we now had to dig into it, found out that because they didn't have insurance, then the mortgage company got insurance for him, and it was 11,000 annually. Something that when we went out and found landlord's insurance was about 2,000 or less, I think. So imagine the difference in the amount I had to pay. So those are the things you want to be ready for. Get your homeowner's insurance, get it early as soon as you get onto contract. That's one of the things you want to start looking out for. Now, from personal experience, and I think Lauren can testify to this, if you're buying a new construction, it's almost always better to go with insurance from the builder. I think because they understand what goes into the home, they know what it is, the quality and all that, they're likely to give you the best rates. Even I would never say, I'll always advise, please shop around, ask, look at different options to make your final decision. But almost always you find out that the builder's insurance is at least good for that first year. And then in that time, you start to shop around. You can bundle with your order and all of that. Okay, I guess this question is for me.
Oh, hey, Rebecca's coming with the questions.
Okay.
Can I chime in on this?
Yes, please. Go ahead, Lauren.
Because I've seen it all. So I've been in the
Mhm.
industry 15 years. I've been in new construction 8 years, right? So
Mhm.
I've worked
Tell
both
me.
sides of the table as a
Mhm.
realtor and in new construction. I'm going to answer this question. I'm going to give you a hack on how you can
Mhm.
make sure. Are there realtors who are looking out for their pocketbooks? Have I seen it? Absolutely. Have I seen realtors come in before the buyer and negotiate their commissions before they negotiate for the buyer? I've seen it. But this is what you're going to do to make sure that you're getting the best deal. and I don't care if you're doing resale or new construction. If you want to make sure that your deal is equitable, you're going to ask your realtor to run you comparisons. That way, you know that you're not overpaying for the house, or if your realtor won't, your realtor should be offering comparisons. Anytime you
Mhm.
make an offer on anything, you ask your realtor, you say, hey, can you give me the history or the data on what this size house, what this number of bedrooms has sold for in this community in the last 3 months? That way, I make sure that I'm at least, if not getting a great deal, I'm at least comparable. My deal is
Mhm.
comparable to the other people's. I don't want to be overpaying for something. So one, get a comparable. And then two, let's say it's a brand new community and there is not any history yet for that community to know if you're getting a fair deal. You are going to ask the builder and your realtor to sit down, and you're going to go through option pricing, which means I don't want to just see what you're selling for base price. I want to see how much it costs to add a standalone tub. I want to get into the weeds with you and see what it's costing me to really actually build out this house. And then you're going to go shop that with other similar neighborhoods in the area. So you can't just leave all of the knowledge up to your realtor to just like, hey, trust
Mhm.
me, I know you're getting a great deal. Ask for the data that supports it.
Absolutely. Thank you, Lauren. And there's so many aha moments in that one too. And Lauren is absolutely right. If you're working with a realtor, one of the first things, and you've settled on a home, or even if you're, trying to think between one or two homes, can't make your decision. One of the first things you want to have is the comps, like she said. And it's so easy to get it from, I mean, the realtor is not going to spend more than 5 minutes pulling that up, except they're trying to be shady. Like we're thinking, So you can see this kind of home, what has it sold for? Not even, and don't ask for what is on the market. What it's sold for in the last 3 to 6 months within a certain radius, around that home. That's part of the information you need to make a decision on what you're going with. That's one. The other part of it is for a realtor, I can speak for myself with this one. The testimonial I get from my client walking away thinking, I got the absolute best deal. They're going to talk about me to every other person in their circle, and that's how I get my business going. But if I've done it in a way that, oh, I'm looking out for myself, how much am I possibly going to get, more from that deal that would take away the option or chance of me working with other people in their sphere of influence going forward. And so a realtor who's what their salt, who knows what they're doing in the business, it's our business is based on referrals. Like, how many people do you really know? Can you really reach? But when you work with people and they're happy, and that's why I stay with you beyond the closing. We're there. I'm with you for life. Like you can't get rid of me. I'm with you for life. Because I'm thinking, okay, you bought this home, you have to be happy with it. So 5, 7 years down the line, you want to sell it to buy something else. You want to, your family's grown, you're looking to buy a bigger home or whatever. I want you to feel comfortable coming back to me to say, let's sell this home and let's try to buy something else. I know you would deliver, a great deal for me. So that's how we work, Rebecca. It's go with your gut instincts. When you talk to your realtor the first time, you would know what they're about. You know how to serve you. All right. Thank you for that question and thank you for the amazing answers, Lauren. Okay, so let's go to mistake number 4. I think we spent so much time on this one, we'll skip it. Mistake number 4 is not understanding your credit early enough. Moson's touched on this a bit. Um, your credit score plays a major role in what you qualify for. And so when you don't understand where you are in your credit, it could lead you into thinking, oh, I can do this. For you go out, looking, and a lot of people do this. You go out looking for a home first before you come and talk to, the experts and professionals that can help you. So you've pulled up your FICO score from your bank statement or something. It's telling you you're 740, and you're like, okay, fantastic. I'm in the good or exceptional range, so I should be able to qualify for the least amount of interest. And then you do your calculation inside your house with your chat GPT and all that. And you go into community, you're looking at $800,000 home and all of that. And then it was like, you talk to a realtor, you talk to the builder, they say, well, we need your pre-approval letter. What do you qualify for? And you go talk to a lender and they say, hey, you don't qualify for that much because your credit is actually 680 or something, funny like that. And you're like, where did that come from? What's that gap? But most of them will probably touch on that better. But the credit score you see, from the consumer report is very different than what the mortgage, lenders will see when they pull it up. I think it's profiled differently. And I'll bring Mosu on to talk about that. But that's to say, one of the first steps you want to take before you even actually go out to start looking at homes, the moment you decide or you start thinking about buying a home, please talk to a realtor, talk to a lender, start to put your, documents together so you know exactly what you qualify for. It can be heartbreaking when you found the home and then you don't qualify for it. So very heartbreaking. So, Bosu, my question is, how can small improvements, and this is you coming from your credit repair, put on your credit repair hat, how can small improvements in your credit affect, how much you ultimately pay for a home?
Okay, so this is a powerful one. And like all I mentioned earlier, you need to speak with someone. Something, the credit score that you're seeing on your bank, online bank, or anywhere, it might not be the right one, correct one. We need to check. And I used to tell people, starting a year before you buy your house ahead, it's not too early. You need to start immediately. You need to start right now. The moment you start thinking, like, I think I want to purchase a home, you need to start. The first thing is you want to check your credit score, because that's the powerful thing that will help. And this contributes to what your approval amount. It doesn't matter how much you're making. So your credit score will contribute to how much the higher approval amount. It will contribute to your interest rate and your monthly payment, and access you. It will give you access to a better loan program. So these are the things that your credit score will help you with. And I would tell you, paying down your credit, your amount,
Your debt?
your credit, what you're owing, paying it down by just 1,000 or 2,000 will really go a long way, because that will increase your credit score by 30 to 60 points, and that will really contribute to this interest rate you are getting. So as of now, we have 580. With 580, you can get FHA. With 620, you can get a conventional loan. And this checking your credits earlier, we can work on it. We can check what can you do. And sometimes we just need to make inquiries and see that when you make that inquiries, we look at what can we do to help you. Do we just need to pay down? Do we need time to just get a trade line added to your credits, what you already have, to boost your credit score? Or do we just want to delete some of the negative things that is going on your account, which will improve your credit score? These are the things that are important for you, so that you can get the best rates and the best loan amounts that you're looking into.
All right, thanks, Mosu. And I have another question for you, so I'm not going to say too much in that. It does say that what percentage down payment will make my credit record irrelevant? Like, if I have what percentage would my credit not be so much needed? I want to say 100% down payment,
Yeah.
but I'd like to answer that one, Mosu.
Yes, so like I said, and that is credit utilization. Like I said, 30% utilization of your credit limit is what I'm always advising. But if you can do 100% before they report your credits for that month, that will always increase it every month. So before your credit reporting date for each month, you want to pay it down 100%. You spend the 2,000, pay down the 2,000, even 3 days before they report your credit to the credit bureau. Pay it down. That will increase it by like 100 points, 50 to 100 points. The next month, you want to spend it within a week. earlier, and before the reporting date, you want to do those things will help to increase it. So I would say 30%, but if you can do 100%, pay everything.
But
Pay everything before the
thanks,
reporting date.
Mosu. I think, well, there's a misunderstanding there because I think they're referring to down payment for the home, if I'm not mistaken.
Oh,
Raya, please correct me if I'm wrong, but I think what she was referring to is how much down payment do I need to have for my home such that the credit will not be relevant? And that's not saying if you're, as long as you're going
oh.
to take a loan, they're going to look at your credit.
Yeah,
Right.
they will look at your credits. It doesn't matter what down payment you want to put
Mhm.
down. They will look at your credit and will look what do you qualify for. And like we mentioned, for FHA you need 3.5%. For conventional loans you need like 3% and whatever you want to put down. But that does not really matter if you don't have 580. There's nothing you want to put down that will make them approve that loan. So you have to have that credit score to be able to, before we start talking about down payment, we'll talk about your credit score first to see if you qualify. Because that's how lenders will know that this is how you can manage credit. This is the discipline that you have. And you really look into that before they talk about what you really qualify for. So your credit score will determine what loan program you qualify for before we talk about your down payment.
Most, and I'm sorry, just for clarification, is credit score still considered if we're talking about different types of loan? Let's say he has like 50% down payment, like he's doing a bank statement loan, or doing something like a non-conforming loan, like not a FHA or conventional, but some kind of other creative loan. Does the credit score matter in cases of those type of loans?
So in back statement, non-conforming loan, they still look at lower credit score, and it depends on the lender. It's not all of the lender. They look at lower credit score and how consistent will be, because it's bank statement. So the first thing they are looking at is not your credit score. They want to look at your bank statement and see if you qualify. And you have, like you said, you have the 50,000 that you want to draw, you want as your down payment. So you can go away with lower credit score with that. Yeah.
Okay.
But
Let me also,
with everything, they still look at your credit score. That will be the first question that the lender will ask. And we have to
okay.
make that ready before we even send your loan to the lender.
So let me just also chime in there. So there is the other type of loan mostly used for investment properties that would not require credit, like the DSCR loan. So they're only looking at the ability for the revenue from that property to cover that loan. So
To cover that. And that's also, that is also for foreign nationals. If you're a
mhm,
foreign national, you can even qualify for that without your credit score.
credit score.
Yes.
Okay. And finally, what I would also say is if your credit is bad, that should not be a deterrent if you really want to buy a home. I mean, what it does is you have to be a bit more strategic about how you structure, your financing for that home. So if you can save up a significant amount of money or you get a huge, payout or pay, something, you have money to do to put down a lot of, the asking price, say you do 50%, what it means is even if the interest rate is higher, because you've already paid down a significant amount of your principal, you don't end up paying as much, even if your interest rate is higher. So it's a bit of math that you have to do there to see, I have this money, how best do I structure this to give me a better deal at the end of the day? And it's not just about today, tomorrow. Let me just spend some time on that. It depends on where you are in life too. So if you know that where I am now, it's probably, I'm not really going to upscale more than this. This looks like what my income level is going to be for a while. Right. So you want to make sure that as you structure the financing, you can take care of your monthly payment within what your income is at the time. And so if you have a lump sum of money, you can decide, am I going to put all of this into down payment? Am I going to buy down my, interest rate to the point where going forward, I can afford to pay that mortgage better than if I leave it high and my mortgage payment is a lot higher. So those are the conversations you want to have with your realtor, with your lender, They can advise you on how best to structure the loan or the payment for the home, because it matters. It makes a whole lot of difference. By the time they run the all, payment schedule, and you see how much you're paying at the end of the day, your 15, 20, 30 years mortgage term, you would see a significant difference based on the interest rate you're going in with. But if you don't have the down payment at the time and you're tired of paying rent, you can maybe then go in with a higher interest rate because your credit is not that fantastic, knowing that within the next 2, 3 years, I'm going to have to work through this and pay a higher amount, build some equity in that home, go in to refinance if I'm in a better position to bring it down. And in that period of time, you're working on your credit, you're building things, you're putting things in place to help you. So this is just to say there are different ways to skin a cat. So there's no
Yeah,
one size fit all. Just talk to a lender, and there are peculiarities to everybody's case. So you can't really
that
give
is
a generic
correct. That is
answer for
correct.
that. Right.
Mhm.
Thank you.
And I would like to add to that, your credit score now, you might think, okay, I have a credit score, I can't qualify for anything, or if I do this, it will not work. It might just you might just be 3 months away from getting to the right score, getting the right score and buying your
Mhm.
home. So if you don't let someone, a professional, look at it and see, okay, if you move this around, this will work and you'll be able to qualify, you won't know, and you will just be sitting on that. Just to add that.
Right. All right. I think we need to move. Well, yeah, we have a couple questions and then we need to move this along a little quicker. So the question is for you, Mosu. It says, can medical debts or school loans affect your qualification?
For medical debt, it depends. It's not all, they don't put all medical debt on your credit score anymore. I think that has been for it. And it depends. If it's not very high, it's not all of those that they add to your credit score, credit report anymore. For school loan, it depends. If you're consistent with your school loan and you're paying it every month like you should pay it, it should not affect your qualification. And this is part of late payment that we'll talk about. If you're late and you're late 1 month or 2 months, that is dangerous. You don't want to keep that going. You want to work on it. We can help you with your school loan late payment that is showing as negative items on your credit report. We can help you towards removing that. And it's only when you have late payments on all of this that can affect your qualifications.
Okay. Thanks, Mosu. I hope that clears that up for you. Um, I have another question for you now, Lauren. It says, do builders partner with or recommend loan financing companies? I know the answer, but I'll let you take this one.
Let me tell you, I can't tell you how many times I have someone, and this is not to say that you should go with a builder's lender or anything, because sometimes I say sometimes the juice is not worth the squeeze, right? Always shop your mortgage brokers. Mortgage brokers don't like when you shop. I'm not to get it here, but shop them, have them compete for your business. Shop mortgage brokers the same way you would shop for a house. Get more than one estimate from lenders. But with that being said, most builders have inside lenders that have profit share. The reason if a builder is saying, "Hey, I'm going to cover all your closing costs," or "I'm going to give you $10,000 towards your closing costs," which is different from your down payment. Closing costs is separate. So let me just say that. A lot of people don't know that down payment and closing costs are not the same thing.
No.
It is typically almost 95% tied in to using their preferred lender, because what happens is that money gets recycled because they have profit share with that particular, excuse me, was the call coming through? Because they have profit share with that particular lender, they get a kickback from that lender. That money goes back into the pool so then they can in the future keep covering closing costs. Now, what you're typically going to see is a lot of the inside lenders for a builder typically have sometimes higher interest rates because of that kickback situation. One, that's one thing about a builder's lender. And then two, a pro is that the builder went to their preferred broker and they bought a block of rates like wholesale. And because they spent $5 million to buy a block of rates from this one particular lender, they can only guarantee that rate promotion with that one particular lender where they wholesaled and bought the mortgage rates. So yes, you have to just compare it and see which one makes the most financial sense for you.
All right. Thanks, Lauren. That is very true because if you've gone to a lot of those builders, you would see, 4.99%. Some of them would even do the adjustable rate. I can do, 2-1. And it sounds good. But the part that Lauren did not mention that I will put out there is they are some of the hardest to qualify for. When you
That's
work with
right.
the builder's lender, they are if you do get to qualify, if everything is straight in your papers, you have fantastic credit and all of that, it's almost always the best deal for you, right? Just because of how Lauren has explained it. Like the client I worked with Lauren with, we couldn't go with the buyer's lender. And because of that, we couldn't get, was it 5,000 or how much was going to be contributed to the closing cost?
I think at the time we were doing 8,000 towards closing costs,
Closing
but
cost.
right, it is there. We call it we have a term for it inside the industry. We call it premium loans, right?
Mm-hmm.
Because the builder's lender, our in-house lender, they're not like they don't have a variety of products. Like they're
Mm-hmm.
limited on the type of loans they can provide you.
Right.
Typically, they're investors that pour money inside of this, want the creme de la creme in this particular box. They don't have this adjustment or this adjustment. So it is sometimes harder to qualify for those.
Right. Right. Absolutely. Thanks for that clarification. So that's to
Yeah,
say,
Lauren, can I ask you a question? Can you hear me? Lauren,
yes.
can I ask you a quick question about that? And do you, so if we lender, outside lender get a borrower qualified, do you work with your realtor to like give towards the closing cost, contribute towards the closing cost if they use
Man,
outside lender?
I feel like an army warrior sometimes over here. It's very difficult. I'm not gonna say it's impossible, but it is very difficult to get the builder or corporate to agree to give closing costs to an outside lender because there is no financial interest for them to do that. They get no profit share, they get no kickback from, and so basically that's money that they're not going to be reimbursed on in the future. That doesn't mean that it's impossible. It's just very
Mm-hmm.
difficult. Now,
Yeah,
there are cases where when the client's financial profile is so complicated that my in-house lender can't touch it because again, that box, those situations where we just cannot touch it, it's easier to negotiate with corporate to get them to give money towards the loan. But if my inside lender can do it, about almost a I- almost 100% of the time, if my in-house lender can do it, they will not give money to the outside lender.
okay. Mm-hmm. Thank you.
Thanks. Yeah. I know. I know we've been down that route a couple times, so I can say that. But if you have a great realtor by your side, you could negotiate for other things. There are other ways to get that money. It may not be part of closing costs, but there are other ways you can get the builder to give something. I'm like, are you giving me this? Can I have that? And the good thing is the builder too wants to sell. So ultimately, at the end of the day, if you go right with your negotiation, you can get a few things, and we'll get to incentives, later, and we'll talk about it some more there. But let's move along very quickly. We're number 5, and we are almost about an hour in, so we need to move a little quicker. But I absolutely love all the questions that are coming in. So that's not to say to stop. Please keep them coming in. That's the whole point of this webinar for today. Number 5 is draining all your savings on the down payment. Like I'm just going to try and do the 20% because I do not want to pay insurance. And, that's all you think about. And then you get that. like Lauren said, down payment is different from your closing cost. And then they tell you your closing cost is going to be another 3 to 5% of the home. That's a shocker. Okay, we get through that. Now it's time to start paying mortgage. Now HOA comes up. We have to pay the homeowners insurance, association fees at the start of the new year. Oh, now we have to pay for maintenance, whatever things come up that you have to pay for. And that's why they say sometimes buying a home to become house poor is never a good idea. You want to make sure that as you're budgeting for that home, you're thinking down payment, you're thinking closing costs, you're thinking about all the bills that are going to come very quickly after that, including things like, HOA payment, insurance at the start of the new year. And what else? Maintenance could come up, especially if it's a resale home, if there are things that your inspector missed. God forbid, but that can be big sometimes. And like a few months into the home, you're seeing foundation cracks or something like that. I have to pay for. You don't want to then be overwhelmed or scrambling, or then you can't pay other bills that would come up. Or you can't even furnish the home because you spend all your money on paying down payment. So that's things we need to think about. Your home ownership should feel secure, should make you happy, confident, comfortable. You don't want to be house poor after buying. So let's not drain our savings on down payment. We've talked about it a bit, but most, so maybe just very quickly, you can shed some light on the myth that you need to pay 20% down payment when you're buying a home. Please talk us through the different loan options and how you can structure it differently. You're muted.
Okay, yeah. So that's a myth. You don't need 20% down payment to purchase a house, and you don't only get help when you're first time home buyer. There are a lot of opportunities out there for you, even if you're not a first time home buyer. And also, low down payment is not a bad loan. We have different loan options. We have, like I mentioned earlier, FHA, you can use 3.5%. Conventional loan, you can use 3% or more if you want to. VA loan, 0%. We have USDO loan, zero down percent. Also, we have a lot of down assistance program for the state of Texas and others that you can use. Take the opportunity to help towards your down payment assistance, whereby you don't need to bring anything to the closing table. And those are the things that you can use the opportunity and you can make use of towards down payment. And what is lack of cash does not mean that you cannot. You can, like Ola said, you can negotiate. Your realtor can help you towards negotiating what can I towards low down payment and low, but like we said, there's closing costs, and a lot of people do not know this, that 5 to 6% will go towards your closing costs, and you need to prepare for that. And is that a question? Did I answer the question?
Yes, you did, but we have a follow-up question, or at least another question in that same space from Stephanie. And she says that what is the best way to go about qualifying for a home loan? And she put in parentheses, USDA rural, when income is the barrier. For individuals on disability with SSDI income and unstable child support, but credit score is 750 plus. Banking score,
Yes.
not the lender score. So how do you go about qualifying for a home loan in that
So the
scenario?
credit score is great. We need to look at your situation and what the income in total is, because they will compare that to the area median income. That's the way they calculate for the USDA. We need to know the location and where you're living and where you're going to, and we calculate it with the median income for that location. So in your situation, we need to get your documents together, get the numbers from you, and see if you're actually qualified. So if you want to reach out and let us look at what the situation is, the scenario, and put the numbers together, and we can look. But you have a great credit score that will work, but we need to still calculate the income and see if you qualify. So if you want to reach out, I can help you with that process.
All right. So, I mean, we're going to share contact details for every one of us towards the end of this, if it's not already showing, so that if you wanted to reach out for a one-on-one consultation, I'd always advise that, because not everything, you can't put everything out here, right, in the chat. So you want to be able to talk more in the details about what you have and what you're doing and what works best for you. Same goes for Lauren. I know Lauren has done a lot, not to mention our builder right now. She currently works as a sales consultant, but she's a new build expert. She works, with a builder, and she can definitely talk to you if you're thinking of going down that road, in terms of what a builder can offer you, in different communities and in different areas of Greater Houston. Okay, let's move on to the next one. And if you have any new questions, please ask. As a realtor, how do you approach recommending builders, and what do you use to match? Great question. I'll answer that very quickly, but let's get to it when we talk about mistake number 7, and I'll keep note of it. I'll make sure to answer that. But let's talk about mistake number 6, which is ignoring first-time buyer programs and incentives. We've mentioned it, in the course of the conversation up until now, but there are so many great opportunities, programs out there, to help first-time home buyers to actually buy their home. The greatest of them, the OG of them all, is the FHA, loan. So you don't have to pay more than 3.5% to qualify, and even though it comes with the MIP insurance, but it's not significant. And you don't even have to have a fantastic credit score. But other than that, there are options, there are grants, there are incentives. I mean, we're hearing the current administration talk about even being able to take out of your 401k with no penalties to, do down payment for your home. For, your situation, your county, your area, there are some grants and benefits that you just need to ask the right questions. And that's what a realtor will do for you, as well as your lender, to say, hey, there is this program out there. Go apply and see if you qualify for it. There's grants that they would give you that can help with down payment assistance. For some, you would even see some loan programs where you can do 0% down payment. Now, it's not just about your profile, it's also about the property itself and the location. Does it qualify for that program? There are different flavors to this that you can use to qualify. Just saying, please don't go looking for a home as a first-time home buyer without talking to an expert, without talking to a professional about it. I had a question for Lauren, but it looks like she stepped away again because she's at work. So I understand that. I appreciate your time, Lauren, on this one. But we're going to come back to Lauren and ask about some of those builder incentives and how to make them work. I'll give an example when we talk about that. There's some builders that would not give you, other than the standard appliances being a stove, dishwasher, microwave. And that's it. Anything else, they don't even give it. And you find some builders who would give you the whole, bundle, the whole package. They'll give you a refrigerator, they'll give you wash and dryer, they'll give you a sprinkler system, they'll give you gutters, they'll give you, so there are builder incentives that you can use. There's a builder also out there that will do a whole home generator for you. I mean, it's one of the high-end builders, but still, with the way the, the old weather and, the climate is going in Texas, in Houston particularly, generators are no longer luxury items. Like most homes, everybody wants to have their home running on generator because we're getting a lot of power outages and all that. Thank God it didn't happen this last one. We didn't really lose power, but it could happen. And so that may be something that you find interesting. There are always builder incentives. I've not found a builder that has zero incentives. There's always something you can ask for, you can negotiate for. They're not going to throw it at you, right? But you can ask for it just by asking the right questions. And so there are ways to structure it to have the buyer take advantage of them. Moving on to I think I have a question here. As a realtor, how do you approach recommending builders, and what do you use to match? The first thing as a realtor is my first conversation with you, I'm listening. I want to hear everything about what you want. As I'm listening, I'm taking information in, I'm processing them. And then the next step is for me to confirm my idea of what you want. What are your must-haves before you decide you're buying a home? There are some things you really want in your home. For some people, it's just that, spa-like bathroom, like this is going to be my oasis. For some people, it's, oh, we're looking to start, growing our family. So it has to be a minimum of 4 bed, 3 bath or two. I can do it a 2.5. I'm listening, I'm taking in all of those information. And I'm reconfirming them with you. What are the nice to have that are not deal breakers? What are your must haves that we really need to? And like I mentioned earlier, then I look at that list. As someone who's worked with several builders, gone to different communities, then I can guide you to say, if this is really important to you, if this is really a must have for you, these are the builders that you can find them with. Case in point, there are some, I have a buyer who wants a 4 bed and a 3.5 bath. You'll be surprised how difficult it is to find that in this day. You either have a 2.5 bath or you have a 3 bath. If he has a 3 bath, it's not very common to find a half bath with it. But that was a deal breaker for her. And so we now had to narrow it down to these are the builders that are likely to give you that in these communities. So that's how I approach it. I basically match my information or knowledge about the builders with what you want to have in your home. Because ultimately, for me, the goal is you have to be happy. You don't compromise on the important things. You can compromise on the nice to have, the things that add to the ambience or things you can change down the line. But the things that are standard, like location, commute time, those things you don't compromise on those things. And that's how I match, and that's my approach for that. Let me take this one before we get to the next one. Because how long, and this is for you, Mosu, how long after a foreclosure, I think is what they're trying to say, do you qualify as a first-time buyer again? So what's the waiting period?
Okay, so to be considered a first-time home buyer again, it's always 3 years. But to qualify for other loan programs, grants, and all of that as a first-time home buyer, it depends on the loan program. FHA is still 3 years. Conventional is like 7 years, I think, to be qualified for those, for the grants and the other loan programs. And other programs like VA, 2 years, USDA, 3 years. So to be considered, it's just 3 years to be considered back. And lenders will look at your history, your credit, building your credit history again. They will look at your income stability. They will look at your debt to income ratio. They will make sure that the ability to repay is back and is there before they can approve it. Thank you.
Okay, I hope that answers your question, Maya. If you have follow-up questions, please feel free to put it in the chat or follow up with Mosu. I'm sure she'll be happy to help. The next question I have is for Lauren, so we're going to wait for her to come back and I'll ask that question. I promise I won't forget. Mistake number 7 is falling in love with the house before the numbers. We've said it several times, and I will say it again because it's one of the biggest mistakes we come across, especially with first-time home buyers. I'm going to again talk about one of the clients that I'm working with now. I met her I went to tour a model home in the Bridgeland community, one of the higher end homes. It's actually a $1.5 million home. And she loved the home. We talked about the features and how she would love to have this and that. Come to find out that, our credit wasn't where it needed to be to make that even, or even our income to make a good down payment or put her in a position to be comfortable to buy anything anywhere near that home. But that was the picture she had in her head. And so she was struggling to readjust to a reality of what she could actually afford. And because of that, that has set her back by a couple years, because now she's going to work towards making sure she gets into that kind of home. And the conversation we're having right now is me telling her, your first home does not have to be your dream home, right? Your first home should be where you start to build equity. It's where you start to, if you're paying rent and you're paying about 2,000 a month, you have no business paying rent. You can afford to buy a home. It may not match everything you've dreamt of, but it at least puts you in that space where you're paying towards something that you own. That money you can take out at the end of the day and use it as a down payment for that dream home a couple years down the line. Instead of you paying rent every year, that money goes down the drain. All you get for that is a roof over your head, right? But there is nothing to show for it at the end of the year. But imagine if you're paying your mortgage with that money, you've paid the price of that home to a certain, you paid it down to a certain level. And that's money you can take out at some point as equity that you can use to go buy, your dream home. So you do that for 2, 3, 4 years to put you in a space where you can actually go for your dream home and afford it. So get your numbers right. Once you think, oh, I'm paying 2,000, I'm paying, I really don't want to keep renting or paying to someone. I want to buy my own home. Then the first thing you do is get in touch with an expert, get in touch with a realtor. Let's run your numbers together. And then you get your pre-approval. It says you're qualified to get a loan of 400K, 300K. Now you know where to shop. And then we are not going to be building castles in the air. We're going to go for those homes. We're looking at communities that have them in that price range. We're looking at builders that have them in that price range. And then we're not going by your must-haves. What are you looking for? What are the features you're looking for in your home? And then we shortlist based on that. And those are the only homes you should go look at. Please do not go looking at, other homes. It's good to dream, right? I just say, if you really want to make a decision and you want to go ahead with your decision, that's not the time to start, perspiring to aspire. Let's just get you in the home. Let's get you started. And then we can build towards that dream home without having to go pay someone else's mortgage while they are building their, rental or investment portfolio.
And then can I say one thing, Ola? Because I get
Yes,
this a
please.
lot. Because I've worked in new construction, I've worked in the luxury, almost $1 million product to your starter home that's 300,000. Let me tell you something. People are not coming off the bench buying $1 million homes as their first home, right? Instagram has us confused that it's instantaneous. You have to get into the game. It's like the game of Monopoly. You have to get into the game, purchase a home, live there 3, 4 years, roll that equity, buy the next level, then roll that equity and buy the next level. You're never going to outsave the market. Because by the time you save $200,000 to buy that $500,000 home, that
It's now
$500,000
700.
home, there we go.
Right.
So my thing is that if you're trying to aspire to a dream home, just get into the game.
Yeah, yeah.
Fantastic point,
Would
Lauren.
also
Thank
like
you.
to add to that. I'll say talk to a lender, a professional broker like us first, and get your pre-approval. Know that okay, I qualify for 350 or 400. Then start looking. We all want a home theater in our home office, and all of those we want it, but go like Lauren said, go into the home first. Start with your first home first. After 3 years, after 5 years, you're making much more money. You are at a more comfortable place. You build your equity. Then you can buy a bigger house. You can have your home theater outside there. But if you wait that okay, now I don't qualify for what I want to live in a home that I have home theater, you're still paying to a landlord too, and it's not your equity. So get your pre-approval. That's the most important thing first.
Thank you. Yes. I mean, so we're all saying the same thing. Absolutely. Getting that first home. That should be all you're thinking about. Getting to that first home. Don't pay anybody else's mortgage and you build from there. Lauren, we had a question for you while you stepped away, so I'll come back to it real quick. And I'm being mindful of time. We're going to wrap this up in 10 minutes. Oh, she's gone again. Okay. So we'll come back to that question. Are you there, Lauren? Okay, let me take this question. This is actually a good one. I'll take it before, because I think Lauren is a little busy. It says, as a realtor, do you recommend buying a low budget house in a high-end environment or a high budget house in a low-end environment if you're at the same price range? I will always say that you buy a low budget house in a high-end environment because there is what they call the influence of the value of that environment. There's a particular way it's phrased. I can't remember it right now, but you're more likely to sell a $500,000, $300,000 home. It's likely to appreciate more, let me put it that way, in a 700,000, 800,000 community because there is that association with what's around you than you trying to sell a $500,000 home in a 200,000 community. Because we talked about running comps. When they run the comps, it's not going to match. And you're going to struggle. People that are looking into that community, you're going to struggle to sell such a high-end home in that kind of community. It is meant for that, that range of people. So I would always advise if you can buy the lowest entry home in a high-end environment, thinking about also all the other associated costs with it and being comfortable with them, that's always a better way to grow your equity and for your property to appreciate than for you to go the other way. And that's just it. I mean, it's I struggle to find a scenario where it works better the other way, really. I struggle to find that. I heard it's possible for seller to pay closing costs. Is this also applicable to new constructions? I'll take that quickly and then I'll pass it on to Lauren for our 2 questions. Yes, so right now it's a soft to steady environment or market for sellers because there is a lot of inventory. We all know it's not a secret out there. So it gives buyers a lot of negotiating power. When it's a seller's market, they can say no, you can ask questions. I remember in 2022, 21, 22, post-COVID, people were listing their homes and they were flying off the market like people were bidding, over the asking price. That's a different market. So the seller could say, hey, I received 3 bids today. Why am I going to be paying your seller cost when someone else is, your closing cost, when someone else is offering me higher and still taking the closing cost? But that was that market. Now, it's not the same market. It's a softer market. It's a buyer's market. So sellers looking to sell, knowing that you have options, would a lot of times when you negotiate would offer to pay your closing cost. And I know Lauren had talked about when you go with the lender for the new build, that could be part of the incentives you get. But I'll let you talk a bit more about it, Lauren.
Okay, so I'm going to give some insight. 7 years ago, new construction only accounted for 13% of all home sales. In the 7 years, we went from 13% to almost 40%. What you're seeing is while new construction is a little bit more expensive than resale, we can throw money at a deal a way that an individual homeowner cannot because we can give you aggressive interest rate. We can cover all your closing costs. You can come to the table with only the down payment. We will cover repairs. We will give you warranty, which is why we jumped so much in market share. And it's because you're dealing with a machine that has money versus just an individual homeowner who may not have all that equity to give you and make it easier for you to purchase. So yes, the builders typically outcompete in incentives, not price, but outcompete in incentives versus the resale market.
Right. Okay, I hope that answers your question. So again, it's all about, asking the right questions, negotiating, understanding that as the buyer in this market, you actually have the power. So if there's any time to buy, it is now. If you're ready emotionally and you have your finances in a good place, I would say this is a good time to buy. And that's why we're doing this webinar to equip you with information that you would need to make the best deals for you. I mean, I hear people say the interest rate is still not low enough, but house prices are low. What tends to happen is once the interest rate starts to come down, guess what? Home prices, because more people are entering into the market, it's all about supply and demand, right? As more people enter the market because the interest rate is getting lower, house prices start to appreciate and they start to get more expensive. And what then happens is, because you waited, you lose out on the opportunity to buy your home. When if you buy it at this interest rate, again, let me emphasize, it has to be at a rate that you can afford. If you can afford it and you're just waiting to get a better deal, I'd say buy it now and think about refinancing somewhere down the line when the interest rate is better, because you've already set your asking price, you've already concluded on the price of the home. What can change is the interest rates versus waiting for the home to be more expensive and you're going at a lower interest. You've lost time, you've lost equity, in my opinion. Lauren, we had a question that was waiting for you, so I'll ask you real quick and then we'll wrap it up. It said, from this, are builder incentives localized or are they available in all their locations? And what are some of the current incentives?
That's a good question. I'm telling you, this audience is coming with the questions. Okay.
I know, they're coming correct.
So, yeah, this is such good questions. Yes, it is localized. Market. So, you may have an area town that's a little slower. It doesn't move. So the builder, remember, we in business to make money. So the builder may not offer or be as aggressive on incentives or may not bargain on the houses. If you're in uptown Houston, they're not going to give you a whole bunch. If you are in Montgomery, greater Houston area, where the demand is not always there, you probably get better deals and better incentives there. It just depends on because you have the big picture of it being a buyer's market. So regardless of where you're buying, it is the better deal. But if you're doing this side of town versus Sugarland, you're probably going to have a better chance going with something that is not as fast paced as a high demand area for incentives.
Absolutely. Yes, you're so right. I've seen that happen. Same home, same model, same builder, different communities, different prices, and for some, they're trying to push that inventory. They're a lot more, they're a lot nicer to us than when you go to areas where it's flying off and they're like, I can't give you that. No, you don't have that. So she also asked about the current incentives. I know you can only speak to, what your builder can offer at this time, but Lauren, do you want to take that? Talk about some of the current incentives.
So again, that goes to localized, but what you are seeing right now, and this is everybody, and I don't care if you're buying $1 million home or you're buying a $250,000 home, everybody has some kind of rate promotion. Rate promotions vary depending on how deep the pockets of this particular builder are. Some have 3.99%, some have 4.99% rate, but no matter who the builder is, if they're a big builder, not a mom and pop builder, they're giving you some kind of rate promotion. So that is across the board, and that is not a localized incentive. Typically what we're seeing is all the rate promotions, and then you have closing costs. Regardless of, even when I was selling during the pandemic and everybody was buying a house, we still contributed something to closing costs. Sometimes it's half, sometimes it's 2/3 of the closing cost. This is where the realtor can come in and negotiate. We promote either 50% of closing costs or 2/3 of closing costs. But if you can push it, you can get all your closing costs covered. I know this is going online. The builders are going crazy. They're gonna blackball me. But everything is still negotiable. You do not have to go with what the builder first offers. Now, there's some areas where it's like take it or leave it because there's such in demand. But in this market, you there's always room for negotiation.
Absolutely. Thank you so much, Lauren. See, that's where you need to be on Doorvana Talks. You're going to get all the teas here and all the ways to make that home affordable for you. Again, I said I'm going to be mindful of time, so I'm going to talk about the last 3 mistakes all together at once, and then I'll just let Lauren and Mosun give their closing statements, as you will. So number 8 is not budgeting for the first year, and we've talked about it a bit. So you want to not just budget for your closing costs, your down payment, you have to budget out for your first year and be sure you're comfortable paying all of those things. If you buy like midway or towards the end of the year, you know your insurance is going to be prorated, your HOA is going to be prorated, your taxes, all of those things will be prorated for that year, right? But as you get into the new year, that all of these bills then come up, especially for insurance that you have to prepay and HOA that comes up at the start of the year. So all of those things you have to put into your consideration and your budget, as well as your mortgage. If you're doing escrow, you know that that's coming on a monthly basis. If you're not, if you have paid 20% down payment and you don't need escrow, you have to make sure that you can take care of it at the time when the bill comes on. That's number 8 mistake. Number 9 is not asking enough questions. A lot of people feel like, I'm going to look dumb if I ask that. That seems like a very risky question, or that's so, stupid that I don't want them looking at me like I don't know what I'm saying. When you're buying, 6 figures is not the time to be feeling like, I don't want to look bad. Ask every question and ask again and again until you get the clarity that you need. Ask your realtor, ask the builder, ask your lender. If your lender is running numbers and you're saying, oh, I see origination cost. What is that about? This is your discount points. What is that about? Explain to me. Which ones am I able to, shop for? Which ones are already, are preset that I can't change? Get all the information that you need. Ask all the questions that you can ask, because clarity now will prevent you making costly mistakes later. And some of those mistakes would not come up until, years down the line. So please ask all the questions that you can ask. There's a question for Lauren that we probably won't have time to take, but if she wants to add it to our closing statement, we can add it to which is, if you're buying a new home, you have 2 options. It could be an inventory home, which means it's a home that is already completed or almost completed, where you've selected every feature of that home. You can't change anything. That's an inventory home. And you can build from the scratch, where you go in, you pick your lot, you go to the design center, you pick everything from your tiles to your cabinet color to your, what kind of, if you want a shower or a tub or whatever, you can pick all of those things and personalize it or customize it within what's allowed. There are different flavors to that. I mean, I'll think things like timing would matter. So if you want to close in 3 months, or you want to move in 3 months, or your lease is coming up and you have to move in a couple months, then you cannot be thinking of building, then you're thinking of inventory homes. In my experience, inventory homes are cheaper slightly. They give more incentives on them because they're already built and they're trying to get rid of that inventory so they can build more. Versus when you're building from the scratch, where, they feel like you really want something and that there's a premium that comes with that. But maybe Lauren can also touch on that. And the final mistake is thinking affordability means buying the cheapest home. There is a lot that goes into buying your home. It could be cheap, it could be affordable, but what does it do to your quality of life? So if I can buy this home in Sugarland versus Rosenberg, and it's cheaper in Rosenberg, but if I live in Rosenberg, I work in Sugarland, that's a huge commute for me. Am I spending 1 more hour, 2 more hours on the road because I want to buy cheaper? Those are the questions you need to ask yourself. You can make what seems like a financially responsible choice when you don't understand that affordability includes the quality of life. Is it a place where we can grow into, or am I going to have to start thinking of moving in a couple years when I'm not ready? There's so many questions you can ask. Is it the kind of community that works for me? Am I someone that loves to hike or walk? I need walking trails. I need, there's some communities that comes with parks, dog parks, this and that, pickleball court, and all of those fancy things. If those are things that are important to your quality of life because you're trying to be very active, then I would suggest that you look for those versus staying in a community that comes with nothing and you don't even have it around you. You have to pay extra for it and you're frustrated. You're not enjoying your everyday life. That's a mistake people make because they're only thinking about the money. They're only looking at the figures. They're not thinking about how living in that home would actually impact their quality of life. And that's the final one. Looks like Lauren stepped away again. I have this question and then I'll put it to both of you to just wrap up. Realtor, what are good upcoming subdivisions now, considering traffic, school system, and other amenities? That is a good question, but that is also a very big question because, like I just mentioned, it's not about the price of the home, it's also about how does it affect you. So if you're looking at school systems, it's very great schools is out there. We know the areas that have the very good school districts, so I'm thinking, oh, you want to be in the Woodlands, you want to be in like Friendswood, you want to be in Katy, all the areas that have the great school system. That would be, so it's all over. I've mentioned the North, I've mentioned Southwest, I've mentioned, so it's all over. If you're thinking about traffic, is there any escaping traffic in Houston? I don't know, because I always road construction. But then that's where you think about commute time. How close is it to where you're going to frequently? Because I mean, it could look like it's a good open road today, and then next thing you hear, there is announcement about construction, they block off a couple lanes, and that's it. So those are the things we want to look at, the things we can control within, our options to decide what are the good upcoming subdivisions. But like Lauren said, we went from 17% 7 years ago to 40%. Subdivisions are springing up everywhere. So you would always find something that works for the area that you're looking at. And they're not just high-end or, budget homes. You have the entire, gamut of it. So reach out. I would be happy to talk more with you one-on-one, know what's important to you, and then I'll be able to give recommendations on what subdivisions are going to be a good fit for you. And on that note, I will turn it to you. Let's start with Mosun to just, give us your closing statement, wrap it up, and then I'll give it to Lauren and we'll
Yeah,
close.
thank you. I want to close by repeating the most important truth of today. You don't need a perfect credit, you just need the right plan. Buying a
Mhm.
home, it's not about being flawless, it doesn't need to be perfect, you just need to be prepared. Getting prepared earlier is very important, and it's also about having guidance with professional. You need to know the same, understand the system, know the game, and if you like a personalized home buyer strategy section, you can reach out to me. I can help you. I'll look at your credit score. I'll look at your income. I'll look at your debt, your goals, and create a clear step for you to start with that. So you can reach out to me. Thank you so much for joining, and I hope you enjoyed today.
Thank you so much, Mosun. Someone has asked that we put, contact information in the chat. So please, let's do that. Lauren, you already put yours. So Mosun, please put yours. And then Lauren, please, let's
This has
hear
been
you.
so good. Again, thanks everybody patience today because back and forth working. So I appreciate everybody while I was hopping in and out. These were really great questions. I'm even if you don't buy with me, and Ola knows this about me. I'm still a resource because I love this. This is my ministry. Um, if you want questions, I'm in Richmond, Texas. I'm in what I would call an affordable line. So my prices are between high 200s, 350s, full price, not base price, full price. To distinguish that. So if you are active in the market, love to meet you. If I'm not your area and this is not the product that you're looking for, please still reach out to me. I'd love to be a resource for you. And yeah, thank you for having me, Ola. I appreciate that.
Of course, thank you both so much. It's been a great, great time. I don't even know where the time went. Like, I was like, we've done 90 minutes already. So thank you both so much. I really do appreciate that. So for the person that asked for a realtor in Dallas, please reach out to me directly and I'll be sure to give you some recommendations. I have a few people serving the Dallas area. So just to wrap it up today, I hope you've all taken, one or two interesting points with you that will help you in the journey of buying a home. True affordability is not about the price alone. It's about balance. It's about the price of the home. It's about your monthly payment. It's about the interest rate. And it's also about your, lifestyle. It's about your comfort. It's about, your convenience. So that balance has to be there, your overall peace of mind. So please avoid a home if it's cheaper, but it's going to stress you out on the long run. I'm Ola Ofuya. I will be very happy to help you if you're looking for a realtor. The way I work, I go all out, I fight for you, I speak for you, I give you all the information that you need. My tag is exceeding expectations every client, every time, whatever that looks like for you, just ask me and I'm there. We're fighting together. And like I said, I'm in your life forever, even beyond the closing, we're talking, you have issues, problems after closing. I'm still there trying to help. If I don't know the answer, I'll find you the answers. I'll get you in touch with the right resource that can help you. But this has been a really, really good session. I appreciate every one of you that has joined and has stayed up till now. If you'd like to schedule a one-on-one consultation, we've all put our details in the chat. Please reach out and we'll be more than happy to help you. If you also want a home readiness checklist, I have one. Please reach out to make that request and I'll be happy to send to you directly. Your credit doesn't need to be perfect. You don't have to have 20% down payment. You just need to have the right strategy and the right team around you. I always say that buying a home it's a team sport. You can't do it alone. Just have the right team around you and you will be absolutely fine. Thank you all for joining. Have an absolutely fantastic rest of your weekend. Thank you. Bye.